Good afternoon, this is Mike Bertelsen, the Bear Market Investor. The market update for February 2nd, 2011. We're here to look at the S&P 500 stock index in the hourly time frame. We're also going to be looking at the volatility index as well. First, I want to address a great question one of the viewers had by the name of Mario. Now, Mario is trying to learn Elliott Wave technical analysis, which I applaud him for. His question was, why do some of the market technicians out there, or Elliottians, have this subwave structure labeled differently than I do? In order to answer that, I have to first say one thing. From index to index, each index, or each stock even, if you're looking at that, has to be looked at on its own. It cannot be compared against that of anything else, unless, of course, you're looking at an ETF which tracks an index, okay? So maybe the ETF wasn't formed until a couple of years ago, and so you don't have the same long-term wave structure in place that you have to examine on the S&P 500. But you can't compare the wave labeling of the S&P 500 against that of the Dow Jones Industrials or the NASDAQ or the New York Stock Exchange or anything like that. Each is going to have their own independent wave labeling. So, long-term as well, they may have a very different wave labeling. But what we do know is in most indexes, we are looking for a major top to be put in place at near current levels. Now, the reason I have this third subwave of 5 of C placed right here, assuming that the other market technicians that differ from me here have this third wave actually concluding there and the fourth wave concluding there. Assuming that this is the count that the other folks have, the reason I have the third subwave ending at this level is primarily because of this. Right up until this point, we had a third of a third of a fifth of C in play. Okay, so that completed probably around this level. Then we had a small fourth wave, and then 5 waves up to complete the larger third subwave of 5 of C. And so that's why I have this labeled that way. I cannot find any other way to label it. This looks very clear to me to be a fourth wave, or a fourth of a third here. Now, you could say that the third of the third ended here or it ended here. I probably am going to say it ended here, but, you could then have an expanded flat or something like that, and rationalize it that way, or some sort of flat correction. But I'm going to say it probably ended at this level and then declined from there in a small fourth wave and then completed another 5 waves up to complete the third subwave. Now, you could actually have wave 4 there, as I had labeled it, or you can have it here. Now you might say to me, if you're new to Elliott Wave, how can you have wave 3 here, have it correct down to this level, move on higher than where wave 3 ended, and then correct down to not even levels where wave A had ended here, or this correction had ended? And how can you label this a wave 4? The answer to that is something called a running flat. Now this actually may answer something that's been bugging me for a while, and that is, why did this, of course, look like a correction, and then we continued on higher, but why did this not look like 5 waves in the perfect sense? Meaning I can actually count 5 waves here. Okay, if I need to, I can count it. But it doesn't look perfect. It certainly does not look like we had right here. So why does this look so different? This looks probably a little better like a 3-wave push or something to that effect, rather than a 5-wave push. But you can say that it is a 5-wave push. So this actually could be a proper wave labeling. However, the real conundrum didn't come in with that. For me, it came in with this decline right here. Now I can rationalize and say I miscounted it, because once you get into very, very short time periods, it's very easy for the wave structure to look different than it actually is. However, I do have to say I was fairly well convinced that that was a 5-wave push down. So what made it odd to me was that we actually did get that 5-wave push up, whether or not we've completed it yet, and maybe we have not, to exceed that prior peak. So that was the real question, that Elliott Wave running flat answers that. Here's what I mean. Elliott Wave running flat would look like this. We'd have a wave A, we'd have a wave B, which actually retraces more than wave A, meaning it goes beyond the point where wave A started, and then it declines, but not quite to the point where wave A ended and wave B started. That is a running flat. So he actually did me a favor, because he allowed me to look at my wave structure again and reevaluate it. Now, I'm not going to put the third subwave there because I just can't reconcile that. But this actually does look pretty good to me, and it answers that question for me. Why did this look like a 5-wave push to the downside? Then we push beyond that, because an Elliott wave running flat actually is composed of a 3-wave push in A, a 3-wave push in B, and a 5-wave push in C. And this is exactly what that will look like. Now, that also does another interesting thing, because that means that we could actually end sooner than I thought we might under the prior interpretation. Under this interpretation, what we had to assume was that this was a first of 5 of C, and that we had a second of 5 of C, that we're working on the third, and then we'll see a fourth and then a fifth. However, under this interpretation, which does actually look pretty solid to me right now, and I didn't even think about that before, and sometimes this is one of the funny things about Elliott Wave technical analysis. Sometimes the pattern will be staring you in front of your face, and you'll be coming up with really unique ways to look at what just happened, not because you want your point of view to be validated, but you're trying to understand it. And sometimes that pattern is staring you right in your face. And so I was looking at something that looked like an imperfect 5-wave push, followed by a 5-wave decline, but then we exceeded it. So that just, it was bugging me a little bit, and that running flat actually solves the problem for me. So unlike the other Elliottians or market technicians, again, I'm not going to put that third wave there, but the fourth wave could definitely go here, and that actually looks really good to me. So what that means is that the end of this push, when we see it, if we have not already, and I think we have not yet seen it, because we've generally moved sideways despite the weakness in the indicators. So that suggests to me that this is probably a fourth wave right here, and that we'll probably see a 5th wave push, and that may actually complete the 5th of C earlier than we would if I had the 4th subwave ending at that level. So be on your guard. Either is entirely valid, but only time will tell in this case. It is a judgment call, as I was trying to say. You have to make a judgment call when you're looking at these things sometimes, because there are sometimes multiple ways that you could look at it, or a case that could be made that something that looks like a 3-wave push is actually a 5-wave, or something that is a 5-wave actually is a 3-wave. It kind of sort of depends, and you have to make a judgment call. You have to look at your indicators, you have to look at the overall wave structure, what you believe is actually happening there based on the evidence that you have, and come up with the best possible count that you can. And so thank you, Mario, because what I'm actually going to do is I'm going to leave this wave structure as a variance here between what I had before and what the other market technicians were labeling it. So in effect, it could actually be correct that the fourth subwave did in fact end there, but I would argue that the third subwave did not end here. Okay, so let's leave it like this. Now that again suggests that we could be very, very close to an end in this. Let's go ahead and switch over to the volatility index. Now we're looking at the volatility index here in the daily time frame. And again, I want to draw your attention here to what's been going on. Of course, we had that bullish candlestick that I was talking about. And I knew we were going to get a retracement of that. Of course, once we went higher and we saw that gap down here in the volatility index, that meant that we had not yet topped in the market. However, I am eyeballing this because it looked to me like we could still see some further weakness. Whether or not we waffled around in a couple days, but I think we could actually come back down to this ascending area of support here in the volatility index before getting that surge in volatility and actually putting a real top in the market. So as I was noting yesterday, what we're really looking for is a push up into this 24 area and then eventually onto that 78.6% retracement and the declining area of resistance. So once we have that push into these resistance zones right here, then we have to start watching the short-term wave structure and see, okay, what does this look like now? But I think we're probably going to see a little more weakness here in the volatility index, and we're going to come back to test this ascending area of support before we see a surge in volatility at that point. And of course, it depends on what that very short-term wave structure looks like. As I was showing you, depending on the very short-term wave structure that you have, the wave labelings, you could actually see something slightly different occurring. I do think that at least with that wave 4 having completed as I had labeled it just a moment ago, that would suggest that we could see further weakness here that will bring us down to this support level before we actually get that surge. If in fact we do have something else in play, then we have to watch, see, do we get a small surge and then we really do put a fifth wave in and then we come back down to support or something like that. But it does look to me like that fourth wave could have been put in just recently here, and that we're just about to complete the fifth wave, which would suggest that we'll come back down to these areas of support before surging higher. So there you go. Those are the possibilities in the short term here that I'm looking at, and I hope you have a great night.